Assalamu alaikum. Dear student, let's start. The namaz break is over. Now let's talk about other reliefs so that you should be getting a relief also. So the objective of these revision classes is not more or less the practice. The main objective is to brush up all the concepts of ATX in a very short period of time. I'm trying my best. Business asset disposal relief, better. If your capital gain qualifies for better, then the tax rate is 10%. In order to get the older name of the better is entrepreneur relief. If better is available, then tax rate is 10% flat. When better is available, when it is available, that is very important. Disposal of going concern business. When you are selling a going concern business, either sole trader or partnership. When seized business assets are sold within 3 years of cessation, sole trader partnership. Disposal of shares in a personal trading company where you at least have 5% shares or more. You are the employee of the company and company is a trading company. So personal trading company means you are having at least 5% shares in that company. You are one of the employees in that company. The company is a trading company. These are the three scenarios, three situations in which you will get better. For all three, 2 years ownership is must. In order to get better, the 2 years ownership is must. Maximum limit of the gain on which better is available is 1 million. And this 1 million pound is a lifetime limit. Better is applied irrespective of bands, but it consumes band. For example, you are having two types of chargeable gain. One is qualifying for better, and another is not qualifying for better. So tax planning. Number one, you must deduct annual exemption from the capital gain which is not qualifying for better, because over there you have a higher tax rate. So annual exemption must be deducted from the capital gain which is not qualifying for better. Second, if you have capital losses, then logically capital losses should be deducted from the capital gain which is not qualifying for better. Okay. Let's say you have utilized annual exemption against the capital gain which is not qualifying for better. You have used the brought forward capital losses, let's say current year capital losses as well, against the gain which is not qualifying for better, but still you have a taxable gain. Now you have a taxable gain which is not qualifying for better, and you are having a taxable gain which is qualifying for better. So when it comes to applying the tax, first we have to apply the tax rate on the gain which is qualifying for better. Okay, let's move. Qualifying ownership period, I have told you at least 2 years. Qualifying ownership period. In case of disposal of business, it must have been owned by individual making the disposal 2 years prior to the disposal. Look this. For tax advantage, enterprise management incentive share option scheme, 2 years ownership period can be counted from the date of option is granted, not when the shares are acquired. For enterprise management incentive share option scheme, 2 years will be counted from the grant date rather than from the exercise date. Qualifying ownership period for shares acquired on incorporation. For shares acquired through incorporation, that is on the transfer of all of the asset of an unincorporated business except cash to a company as a going concern in exchange wholly or partly for shares. The period of ownership of unincorporated business can be counted towards 2 years ownership period of better on the disposal of the shares. It is possible that an individual has sold his business to a company, or you can say that individual has converted his business into a company. If you're converting your business into a company, that is treated as you are selling your business to a company. And we have seen when you are selling your sole tradership, you will get better, provided that the ownership period is at least 2 years. Now, what is this associated disposal concept? Let me explain. For example, let's say Mr. X is a partner in a partnership business. Okay. Assuming Mr. X is a partner in a partnership firm. Okay. He's having, let's say, 30 to 40% shares in that partnership. Okay. So what Mr. X has done, Mr. X, let's say, has given one warehouse to the partnership so that partnership can use that warehouse. Now let's say after 2 years, Mr. X has decided to sell his share in the partnership. Other partners are willing to buy the share, no issue at all. And obviously, when Mr. X is selling his share in the partnership, that share will qualify for bidder. Along with that, Mr. X has requested to the partners that you people should buy that warehouse also, which I have given to the partnership. So you people have been using it, let's say last uh, 2 to 3 years. So I want to sell that warehouse as well. Now, Mr. X, if sells that warehouse also, so this warehouse will be treated as an associated disposal. Whatever the capital gain comes on that warehouse, that will also qualify for bidder. But if Mr. X was charging rent to the partnership firm, for example, Mr. X was taking, let's say, 40% rent of 40% of the market value of the rent. Assuming the rent was £10,000 and Mr. X was charging only £4,000 to the partnership firm. It means he was charging 40% of the rent. He was charging 40% of the market value of the rent. In that case, if Mr. X sells that warehouse while selling his sharing in the partnership, it is still associated disposal, but now whatever capital gain comes on warehouse, entire capital gain will not qualify for bidder. Only the 60% of the gain on the warehouse will qualify for bidder. So that is basically called associated disposal concept. Now let's talk about investor relief. Basically, the way back there was only bidder. Okay, there wasn't any investor relief. In bidder, basically, you will get bidder if you have shares of a personal trading company. In personal trading company, the very important concept is you should be the employee of that company. Okay. But after some time, HMRC people they come up with a concept of investor relief in which you're not the employee of the company, still you will get the relief. And investor relief is exactly, it works like a bidder, but in investor relief the flat percentage is 10%, lifetime limit is 10 million, and a very important point that shareholder should not be the employee of that company. Let's say if you are a director in that company, then you should not be getting a salary. Only that you will be getting investors relief because it's an investor relief. So you should not be an employee of that company. If you are a director of that company, then you should not be getting remuneration. Investor relief was introduced by Finance Act 2016, but is only now available because of the 3-year holding period requirement. Investor relief effectively extends bidder to external investors in trading companies, which are not listed unquoted on a stock exchange. However, investor relief has its own separate 10 million lifetime limit. Qualifying gains are taxed at the rate of 10%. To qualify for investor relief, share must be newly issued shares acquired by subscription on for at least 3 years after 6 April 2016. With certain exceptions, such as being an unincorporated director, the investor must not be an employee or director of the company whilst owning the share. Interaction with EIS, Enterprise Investment Scheme. Gains qualifying for bidder are deferred via an investment in EIS. We will study that inshallah after capital gain. Will still qualify for bidder on a becoming chargeable. So we have seen this investor relief. Now move ahead. This is the summary of all the concepts. Dear student, I would seriously request everyone have a look this on this summary. This will really help you. Just read it only once. It will definitely give you the benefit, no doubt about it. Okay. Now let's talk about principal private residence relief and letting relief. What is this? Basically, let's say Mr. X is an individual. Okay, he lives in UK. Okay, he has his own home. It is also okay. But now Mr. X wants to sell his house. But he's worried about one thing. He's saying, it is my house. It is my house. I own this house. Okay. And he says, I love my house. Okay. We admit all these things. And now Mr. X says, I want to sell this house, but I just want to know, do I need to pay tax on the capital gain which comes on this residential property? And we know that the residential property, they attract the tax rate 18% if there's a space in the basic rate band. And if there's no space in the basic rate band, they will go for 28%. So Mr. X is little bit worried about one factor. Mr. X is asking, do I need to pay tax on the capital gain which comes on my own house which I'm selling it? HMRC says yes and it says no. Now that makes Mr. X a little bit more confused. Because Mr. X is saying if it is yes, then why no? And if it is no, why did you say yes at the first time? Basically, HMRC says Mr. X needs to fulfill only one condition. If he can manage to fulfill one condition, there will be no tax. Entire capital gain will be exempt. The condition is Mr. X needs to prove one thing, that ownership period of the property, ownership period of the house is actually equal to the occupation period of the house. Repeat, if two things are equal, one, ownership period of the house is equal to the occupation period of the house, then you will not be paying tax. But if occupation period, actual plus deemed, if occupation period of the house is lower than the ownership period, then you have to pay the tax. Not on the entire amount, but on a certain amount. Obviously, opposite is not possible. In some of the countries it is possible, but obviously UK it is not possible. Okay. So now the question is, how do we how do we calculate this occupation period? Let me explain that. One more thing. This private residence relief is available only on one property. If someone says, I have more than one houses, all are my principal private residence, then according to HMRC, you have to notify HMRC which property, which accommodation, which house should be treated as principal private residence. If you're not informing them, then HMRC will decide by themselves. Okay, another thing, married couple and civil partners, provided they are not treated as being separated, divorced, a married couple, civil partners is entitled to only one residence between them for the purpose of the PPR exemption. Okay. If it is a married couple, obviously it is not possible that husband is saying my principal private residence is different and the wife is saying different, and then they both need a really good beating from HMRC. What you people are saying, do you even know that what you people are saying? What sort of couple you are? They're saying we are couple. We are like that. No. You can't do that. Sorry. The operation of the relief means how it operates. Don't worry at all. Where there has been a period of absence for the PPR, the procedure is, let me tell you. The period of occupation. Number one, any period of actual occupation will take. Last 9 months of the ownership will always be taken as occupation. Either he lives or not, means last 9 months of the ownerships are always exempt. The following periods of deemed occupation will also be considered. Period of totaling up to 3 years of absence for any reason. For example, if Mr. X does not come home for 3 years because of any reason, but after 3 years he comes back home, he reoccupies the home, so that 3 years will be countable also. Any period spent living overseas due to employment, that is also counted as deemed occupation. Periods of totaling up to 4 years of absence in which the individual was prevented from living in the UK property. For example, someone was working in the UK but he was not allowed to reoccupy his home for 4 years, for example. So that will, but after 4 years, assuming he has reoccupied the home, then that period will also be treated as democcupation. So in democcupation, basically 3 points are coming. One is absent for 3 years up to due to any reason. Any period is spent living overseas due to employment, and maximum period of 4 years of absence in which individual was prevented from living in the UK property because their place of work was too far from the property and their employer required them to live elsewhere in the UK, or they were self-employed and their work required them to live elsewhere in the UK, or they were living overseas due to their self-employed business. Okay. These are the deemed occupation period. Note that the period of deemed occupation must be preceded and followed by actual occupation. Means initially that person was living in that accommodation, then the democcupation period comes, but then he is going to reoccupy the home. The condition to actually reoccupy the property after the period of absence does not need to be satisfied for 2 and 3. Above, where the individual was unable to resume residence because the terms of the employment required them to work elsewhere. But you have to prove because of the terms of employment was such that I was not able to reoccupy my home. Okay. So simply, just a minute. Okay, let me tell you one more. Letting relief. Now let's talk about letting relief. Actually, letting relief is the lowest of £40,000, the amount of the gain exempt under normal PPR rule, and the part of the gain after PPR attributable to letting period. But this letting period is very important. Let me explain. Letting relief is available where an individual private residence relief is let for residential use. It applies when the owner lets part of the property whilst still occupying the remainder. That's a change. The way back it was not in the Finance Act. For example, if Mr. X leaves the property for 3 years and while leaving the property, he gives that property on rent, he will not be getting any letting relief. In order to get the letting relief, one portion of the property you have given on the rent, another portion of the property you need to reoccupy. You have to live in another property, another area of the property. Letting relief is no longer available where the owner is absent from the property and lets the property out. If the owner has one lodger who lives as a member of the owner's family, sharing the accommodation and taking meals with them, then full principal residence relief will be available. Letting relief will not be considered, obviously. Then, if there's only, let's say there's only one room in which owner is living and that tenant is also, for example, living. So how can you say you have given a property on rent? You will not be getting any letting relief. Sorry. It does not apply to let property that is not owner private residence. For example, buy or let properties, then obviously letting relief does not apply. So the letting relief is lower of £40,000. The amount of the gain which is exempt under PPR and the part of the gain after PPR attributable to letting period. This is very important. The letting period is actually the period in which you have given the property on rent. One portion of the property was given on the rent, but another portion of the property you have occupied. Just a minute, let me bring more pages. Okay, so that was about letting relief. If you can see this question 33, I've given you the question as well as answer. That will really help you a lot. Like, look at this. Live in 2/3 of the property and rent out 1/3. Only then it will qualify for definitely letting relief. Because one portion of the property you need to be occupied. Okay, let me tell you this. Okay, another thing which you need to know is If there's any business portion of the main private residence, then on the business use of that particular property, you will not get any principal residence relief. It is possible that someone is having a really big house. It has, let's say, 10 rooms, but out of 10 rooms, 2 rooms, let's say from day one till day last, they were being used as uh, in the business. So logically, you'll be getting the relief only on the 80% of the property. If 2 rooms were used in the business from day one till day last. But it is also possible that initially the entire property was being used as principal private residence, but after some time, uh, one of, after some time, one portion or maybe little bit portion of the property was used as business. In that case, how to calculate the chargeable gain? Basically, initially the entire property was as principal private residence, but after some time, one of the portion or maybe 2/3 of the portion, whatever, the portion of the property went for the business use. Then how do we calculate chargeable gain? How do we calculate principal private residence relief? To understand this concept, this question is very good. Let us spend 2 to 3 minutes on this. On 31st July 2020, Alex sold his house for 1,25,000, resulting in the gain is 70,000. The house had been purchased on July 2008 and one of the 5 rooms had been used for business purposes, but from January 2011 to the date of sale. It means initially this room was not used in the business. After some time it was used in the business. Now, what do you mean by this? Now listen and listen carefully. It means out of 5, 4 rooms were used as principal residence. So look at this. The gain is 70. Out of this 70,000, 4 upon 5, this 56,000 is exempt, no issue at all. The problem is only with the one room. How to calculate chargeable gain on that room which is used now for the business? Initially, it was used in as a part of the principal private residence. So let me tell you. From 1st July 2008 till 1st January 2011. 1st January 2011. 1st July 2008. So let's see how many months it was used in the residence. That is -6, it is +3. If I multiply this with 12, I will get -6 plus 36, it comes to 30 months. So initially this property, this portion of the property was used 30 months. First 30 months was used as private residence. Okay. After that, it was used only for the business. And from 1st January 2011 till 31st July 2020, till 31st July 2020, you will get 115 months. From 1st January 2011 till 31st July 2020, you will get 115 months. It means remaining 115 months, one upon 5th room was used in the business, but there's a problem. This room was initially used as a part of the main residence. In that case, entire 115 months will not fall in the business use. From this 115, I will minus the 9 months. Because last 9 months of the ownership, they will always qualify in occupation. So which means that the occupation period of this room is 39 months. So it means the chargeable gain will relate to only 106 months. The entire ownership period is 145 months. And out of this 145 months, logically 39 months they fall in the occupation period. So business, the time period in which that particular property or accommodation area was used in the business, it will not be treated as 115 months. It will be treated as 106 months. Reason? Because initially that part was also a part of the main residence. If initially it was not used as the main part of the property, then you would not be getting this 9 months as well. So today we are getting 9 months. also because initially this part was used as the part of a principal private residence, which means that if I tell you how to calculate the chargeable gain, chargeable 70,000, simply 1 upon 5. Then I will take 106 months. These are the chargeable months. Out of the ownership is 145. So this comes your chargeable. This gives you the chargeable gain. This gives you the chargeable gain. The chargeable gain is 10,234. If you want to ask me the exempt gain relating to this, I'll take 70,000, 1 upon 5, 39 upon 145. You will get the exempt gain. 70,000 divided by 5 multiplied by 39 divided by 145. The exempt gain comes 3766. 3766. So this is another presentation. So this is basic. This will result in basically 39 upon 145. What is happening? From 115, I'm deducting 9. From 115, when you deduct 9, you will get 106. When you deduct 106 from 145, you will get 39. So it's a really good question, which gives you the idea if the portion of the property is used in the business, then how to deal with principal private residence relief. Just 1 minute azan break. So it's a good question to have a look. What else? Now we have this paper-to-paper takeover and reorganization. This I will start inshallah, but after the namaz break. Right now it is not possible. So inshallah from here onwards I will cover the after the namaz break. So I will try my best to complete the capital gain tax today. Don't worry at all. So simply, thank you very much for watching this lecture. Assalamu alaikum.